Hey guys, welcome back. Patrick here. In this video, let's answer the question, can you believe in this stock market rebound? Or are we going to see more pain like we have over the past 2 weeks? I don't know about you guys, right? But I have a lot of retail type stocks in my portfolio. And over the past 2 weeks, they kind of melted by 12%. So it was pretty painful. So now today we got a pretty nice rebound. But can we actually believe in it, right? It's now time to actually buy the dip heavier, or should we take a little bit of a breather and kind of wait and see? So let's answer that question, but first a word from our sponsor. Today's sponsor is myself. We finally did it. We launched a Patreon and Discord. Here you'll find all of my exclusive content not published on YouTube and a community of investors looking to build long-term wealth. Our current goal is to reach 250 early supporters, which will be grandfathered into future programs. So if you'd like to support the channel and level up your investing, check the link below and I'll see you in Discord. And while you're at it, click the like and subscribe button and help me reach 50,000 subs. Thank you. Welcome back, and thanks to our new sponsor. You guys have requested it for several months. Well, it is finally live. You can go and check it out and maybe sign up if you want to get more exclusive content that is a little bit more niche, right, about real estate and stocks. So that's the one thing that I noticed on YouTube. There is a certain type of content that really works. Top 3 best stocks that I'm buying now, or the market's crashing, do this now. Videos like those attract a lot of views, but anytime you try to go a little bit deeper in a strategy or in a specific stock, it just doesn't get the views, right? So that has been really frustrating, and because of that, there's a lot of topics that I couldn't talk about on YouTube. So I'm going to focus on that on the Patreon. If you guys are interested, check it out, and otherwise, I'm going to continue making videos on YouTube. They're just going to be about the broader market and more broad strategies. All right, so now let's look into this market. It is very difficult. This is more of a 2018 and 2019 market, not so much a 2020 market. In 2020, it made everyone look like geniuses. You could literally flip a dart to one of the stocks, pick it, and you would probably double and triple your money, right? So it was very, very easy in 2020, and that made a lot of people a little overconfident, right? Well, now things are very different. So I see that the market is extremely confused right now. I'm going to show you some charts. It is very misleading. The way I'm seeing it is, think about it like you're on the Titanic, right? You see little iceberg, it looks like, well, it's not too bad. And then underneath, there's a massive iceberg and you're about to crash. So I'm not going to say the market's about to crash. You guys know I don't believe that. However, there are some pitfalls right now. The market is very conflicted between the fears of COVID and the fear of inflation. So it's kind of like a lose-lose situation at the moment. So let's look into the charts and we'll see what we can do about making this successful for us. All right, so you know I always start with the SPY, which represents the S&P 500. It was up 6 points today, up 1.43%. I want you guys to pay attention to the fact that we've been in an uninterrupted uptrend since November of last year. So people were freaking out about the election, but after that, they piled into the stock market. So look at how there's been a couple of sales, right, in February, March, and then in May. Bitcoin actually spiked over $60,000 in April, and since then it's actually dropped by 50%, right? And we felt a lot of weakness in our portfolio. Meanwhile, the SPY, you'd swear like everything is going perfect, right? It's still very, very close to all-time highs. So what's that about, right? And every time there's been that little downtrend here, we've seen those rebounds. And that's why today I was like, well, is this rebound what we should expect? Or the previous 2 weeks of pain, is that kind of more representative of what's going to happen in the future? And that's the big disconnect that I see in the market right now. Because you guys probably know, if you're a SPAC investor or you're a retail investor, you know for a fact that when the SPY dropped a couple points in February and March and in May, right? They didn't feel a lot of pain, but our stocks felt pain. They were down 20-30%. So this is very misleading when you see that massive uptrend, right? The reason why it's so dominated by the big tech stocks like Apple, Microsoft, Amazon, Facebook, Google, even Tesla. Tesla went down, but it's still at 649, right? 59 rather. Nvidia, which has been on a huge run, and even companies that I'm not as bullish on, like Home Depot, that's been on a massive run in the past few months. So when those companies do well, which are considered like core portfolio, super safe, well, you see a SPY that is at all-time highs. You see Apple very close to all-time highs. It's dropped a little bit, but overall it's been doing amazingly well. But that is for the SPY. Look at the Russell. Since the beginning of the year, it's actually flat. It's not been doing anything. And that's a lot more what we feel like. You see these little spikes, and then it crashes. Little spikes, and it crashes. And that is a lot more what we saw in previous, like, not necessarily bearish years, but years where the market was not doing very much, right? So we've been accustomed to 2020 when everything was skyrocketing. Well, you have to like kind of forget about that. That's not how the market usually works, right? Usually it's a nice slow uptrend like this. It's very, very boring, and that's kind of what we're seeing right now in stocks that are more like what we tend to buy. Most of us are not as invested in the S&P 500 stocks, right? So I personally own some of them, but that's not a large portion of my portfolio. We're more into stocks that are in the Russell 2000, Russell 3000. Stocks like Tattoo Chef, which recently got into the Russell 3000. This stock has been hovering for, the better part of the past, since the beginning of the year. Like, it's not really going up, it's not crashing, it's kind of in that channel between $16, $17 and about $22, $23. Right? That's the type of stock that we've been investing. It's not doing anything. Still, we have to give them credit. All of the recovery plays did really well today. MGM recovered kind of from the massive beat it's had in the past few days. If you guys remember, in a previous video, I mentioned one of the spreads that I had between $39 and $40, while my position got attacked very rapidly. Look at how in last Wednesday, it was above $41 and actually dipped to $36 yesterday at the low. So I had to close my position pretty quickly, much quicker than I wanted to, right? I got a little profit of $19, nothing to really write home about, but at least I didn't lose money on this one, even with the stock dropping super fast. So this one still has a fairly strong support around $37.50, $37. What I think is happening is every time the stock drops, they have that share buyback program, so they just buy back some shares and support the stock that way. We'll see what happens, right? This is the type of stock that's so vulnerable to the COVID narrative in the media. And then you have the same thing with Tapestry, which is kind of like the proxy I'm using right now for the retail-oriented stocks. They're heavily dependent on people going out and shopping, right? So it's up 4%, but yesterday or rather since last week, this one was also getting beat down heavily, right? So it feels like any day of the week, depending on what the narrative is in the media, if it's inflation, like some stocks are going to get hurt. If it's COVID, other stocks are going to get hurt. That's why we don't see really a big direction in the market, because on a day-to-day basis, it keeps changing. Now, one company that's very interesting is Peloton. This one yesterday, with the COVID narrative in the media, went up because it's considered more of a stay-at-home type play. And then today, with the more recovery, more rebound in the market, it's still going up, right? So this stock currently is kind of immune to the narrative in the media. I just thought this was an interesting one. So if we go back to the Russell, right? Look at how this rebound here, it keeps doing the same thing over and over again. So today was a nice rebound, but personally, I'm not really confident about it whatsoever, right? I think that this is just a blip, and we're going to need a lot more to get a clear direction. So if I use a doodle, let me see if I can clear this, right? This is going to be the support for the Russell. And remember, these are stocks that we mostly invest in as smaller investors, right? So this is going to be the support, this is going to be the resistance. It's hit the resistance like several times here, 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 and the support like here, 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 and here. Right, so we have a very, very strong channel for the Russell. We can actually use this one to kind of guide us as to what's going to be happening. Currently, until it really dips under it, I'm not seeing a crash, right? People keep talking about a crash. I think there's going to be a slow bleed in the market, possibly in the next few months, but until you see something like this where it really goes straight down under the support, I don't see a crash, and I don't see a big run up. It would have to go above this resistance that it's had several times now. And what I think is more likely to happen, and that's kind of what I'm personally concerned about, is you have the S&P 500 that's been at all-time highs. The expectations for these companies are absolutely flawless. Currently, they're priced to perfection. So there has been that flight to safety where everyone is piling into these stocks. So now they have to perform. And even if they bring out amazing earnings in the next few weeks, I think that people are still going to be disappointed. So yeah, if anything, we might see a small correction for the big tech stocks, but overall I expect the market to continue being very choppy. We have those two narratives that are kind of canceling each other out, and until we have a resolution on that, like either COVID is, we get rid of it, or the market's going to have that pressure downward continually for the next several months. And same for the inflation fears, right? If COVID, we get rid of it, then we're going to have the inflation fears. So it's kind of like a lose-lose situation. So for that reason, I'm being very cautious right now. I'm not making any big bets or anything like that. I'm still going to continue nibbling on stocks I feel are oversold, right, and undervalued. And also, I'm kind of selling options and spreads based on this range-bound area where we're at, right? We saw with the Russell that's kind of not either going up or down. It's kind of stuck between those two lines. So I'm taking advantage of that. But overall, I don't see a big direction in the market until we get one of those two narratives that actually gets dispelled in the next few months. Also, there's that patience game, right? We have to go back to 2018, 2019. Back then, it wasn't all about the hype and FOMO and the short interest and all of that. A lot of the investing game is just waiting for the boring earnings and seeing if the company is actually increasing its revenues and profits. If it does, over time, we're going to see that growth in the stock market, right? So be very patient. Don't be a hero. Just open small positions, and over time, you'll do great. See you guys later, and if you're signing up, come say hi in Discord.